If this doesn't do it, then I don't know what will. I think we're good. I think we're good, people. Just 1 second. Here we go. For cry eye. There we go. Finally. So, I know, guys. You're like, yeah. Here we go. Bought some Leggett and Platt 12 shares. I bought a lot. By the way, the market's been dropping, and I'm just been sitting on cash, starting to move that in. I still like Leggett and Platt. I think they're going to hit a little bit of a rough patch here with the economy slowing down, but in 10 years' time, they're still going to be around. They're still going to be making products. So I bought 12 shares of Leggett and Platt at $32.98. Dipping into Target again. I got 2 shares at $148.50. Received Target dividends, as you can see right there, $4.32 of Target dividend. Oh, you can see my chat pop-out window, what I'm doing there. That's fun. Let's hide that. This is all good fun on a Sunday morning, everybody. Verizon, because I think they're going to be able to keep paying that dividend. They're going to be around. Super boring company. 2 more shares at $38.44. I think that gave me 40 shares of Verizon in my bridge account, which is what this is. Shout out KC, Next Star Media Group. Brought them to my attention. Here in Chicago, they own WGN, so it's kind of cool. Every time I have WGN radio on, as soon as they do their end of like going to a break, it says WGN Radio, a Next Star Media company or Next Star Media Group company. Very good company. I would look into them if I were you. $179. Dividends from MetLife, $5. Intel, I bought 5 shares at $28.90. I still think they're a good turnaround play. I think they're really risky. And turnaround plays are by their nature risky. It doesn't mean it's going to work out, but I'm confident in Pat Gelsinger. And again, talking with KC, I don't fully understand the inner workings of the technology, but looking at their numbers and where they've been, and I guess in this case, I'm putting my faith in the management, Pat Gelsinger, and his plan to turn them around. And 2 more shares of Target, or another share of Target on the 15th at $146.50. So I've been loving buying it here. 5 more shares of Leggett and Platt at $32.50. This is the bridge continued. 10 more Leggett and Platt at $32.45 on the same day. More Next Star, $177.95. Another share of Target, $145.50. Sorry if this sounds a little redundant. I hope this is helping some of you just to see what I bought. Share of Celanese, $103.50. Warren Buffett was buying them in the 130s. They've been buying them again after they dropped. So that's what put them on my radar. Specialty chemical company. And I really do like a lot of what they're doing. Again, more Intel, because 27.25. LyondellBasell, another chemical company. This is something that's similar to a Celanese at $80.92. Received dividends, baby. McDonald's, $15.20. Some dividends rolling in from Prudential, $25.20. Another share of Celanese at $199. So I'm almost getting them under $100 once again. I'm loving it buying them around here. I'm loving it. Leggett and Platt, again, 10 shares, $31.90. And then I bought more Intel. And I just did a little bit more. Intel again, $26.55. And then this wrapped it up here in the bridge. I told you, a lot of buying, dude. A lot of buying. Bought 1 share of Target at $145.99. And 5 more shares of Leggett and Platt, $32.19. Received dividends from Duke Energy. And here we go. This is the self-directed IRA. Getting to the nitty-gritty here. Received dividend. I can't read it, sir. Received dividends from Chevron. That means you couldn't read it either. $21.30 from Chevron. 3M got dividends in them. If you remember, I sold 3M out of the bridge. I put money into Norfolk Southern and Union Pacific, which I've sold out of Union Pacific. More BDC company. I did a video, the 10% yield video, where I go over a little bit more in depth than normal about why I bought Ares and Main Street Capital. So yeah, just a couple tranches of Ares at 1875, and then at 1846, MetLife dividends again. Main Street Capital, ticker MAIN, bought 10 shares at $36.95. More McDonald's dividends rolling in the door in that account, and got my Main Street, my very first main dividend, $22. That was on 100 shares. And Realty Income dividends, these two are monthly. Main and O, $19.84 from Realty Income. Do you remember 1984? I remember 1984. I was in second grade. No, third grade, 1984. I think that's when, anyway. Yeah. And then this is wrapping up the self-directed IRA. $2.95 of bank interest. So when you have a lot of cash at Schwab, they pay you interest on that money. So not a lot, just $3. More Maine, 10 shares at 36.80. I bought one little share. Realty Income at 62.70. That was my 92nd in this portfolio. 10 shares of Aries Capital at 18.25. And then qualified dividends from Duke Energy, $9.05. And we're not done yet, getting there. Dividends from 3M, 16.39. Enterprise Product Partners. You know what this is? This is the Roth IRA. I told you, dude. Daddy's making breakfast, flipping them flapjacks for my kids with the little chocolate chippers in there. So, yeah. Anyway, so that's why this is kind of quick, but it's the information's there. You're getting it. You're gonna get it. 16.39 from 3M. This is in the Roth. I bought one share of Enterprise Products Partners at 23.98. I can finally start in a few weeks dumping more money into the Roth. Stag Industrial Dividends, 170. Dividends from Kellogg's to $5.90, which I heard they're sponsoring a few of the bowls. I think they got the Cheez-It Bowl that's coming up. Some other bowls. I don't know. There's bowls everywhere. More bowls than a weed shop. And got $7 from Duke Energy. And then last, I want to show you guys this. This is the wedding account that we've set up for the kids. And what we're doing is they're not getting married yet. They're only 14 and 15. I'm hoping I've got about another 10 years minimum, but $100 a month, $50 for each kid. And I'm splitting it between DIVO, as you can see, and SCHD. And it's kind of cool. This is the only one I'm reinvesting dividends into. So if you're new at this and you don't know what dripping is, dividend reinvestment plan, received $1.34 in DIVO, which they sell covered calls on blue chip stocks like your Procter & Gamble's, McDonald's, Merck, companies like that, ones that I love to hold. And I received, they bought more shares. That's all you do. I got $1.34. They bought 0.0362 more shares. And then same thing for SCHD, received $6.41. Boom, right away the next day on the 12th, on the 13th, they bought 0.0825 shares more of SCHD at $77.74. And then to wrap that up, I bought more on the 15th, SCHD, and that's when I have it hitting $100 on the 15th of every month. And then I just buy whatever I can buy out of it. So I had enough to get one more share of SCHD at $75.75 and a share of DIVO at $36.05. And with that being said, I'm going to stop flapping my gums and not interacting with all you people. And I will talk to you now. So, yeah, baby. Yeah, baby. What, let's see. Anyway, I want to say what's up to Matt and to Casey, Caitlin, Kate. Dude, gang's all here. I love it. I love it. Oh, Cody, down there at the bottom, Citizen of the Year, Cody. We are planning to chat, man. We're going to plan a little thing here. And yeah, shout out to Starbucks. Dude, this is killing me. We're glitching. I don't know why we're glitching or lagging. That's what all the kids say. Do you guys think the market's going to keep going down? Do you think this is a little bit of a rebound? So as I was telling Casey, I was just reading John Malden's weekly newsletter and then by extension, Howard Marks from Oak Street Capital or Oak Tree. Did I say Oak Street? That's around here in Chicago. We got Oak Street Beach, Oak Tree Capital. And it's really interesting. He thinks that in his over 50 years career in the market that we're in a third sea change. The first sea change was, in a nutshell, was the high yield bonds, because people used to invest without a lot of risk. So you would just invest into very safe corporate bonds, right? Corporate debt, very safe company corporate debt. And then that kind of started changing and shifting about 50 years ago with the high yield bonds. So you could take a more riskier investment approach and you would get higher yields to be compensated for that extra risk that you were taking. So that was one of the sea changes that really shift the risk reward investing mentality, which he said didn't exist before. And then the second one was mostly Paul Volcker in the early 80s, late 70s, early 80s, with starting to, or I should say right after they had to crush the economy, starting off a 4-decade period of declining interest rates, which led to this massive return we've had for about 40 years. So Howard Marks thinks that the new normal is going to be like 2 to 4% inflation, or I'm sorry, 2 to 4% interest rate from the Fed. So that's going to be interesting to see. And yeah, hey, thanks, Casey. Yeah, she's gonna be okay. It's just we're a little bit of recovery. So, all right, I'll get to all you guys in a second. John was so nice enough to ask about EQH. I haven't looked into EQH ever, and a lot of you guys were talking about TSN, Tyson Foods, and it's interesting. It's very interesting. I've been doing some digging. I just started getting into their annual report, which came out in November. So it's pretty recent information. And did you guys know that Walmart is 17.7% of their sales? That's their biggest customer for Tyson Foods is Walmart. So 17.7% of that product. Plus the younger kid, and I know KC brought up nepotism with Tyson Foods, that there's really, and they put it in the annual report. So their chairman of the board is a John Tyson, and then the future CFO, the John R. Tyson, the guy that wandered into somebody's house in Arkansas, I think, and fell asleep in somebody's bed. He was drunk and in the wrong house. Hey, we've all been there, right? You've had that happen. And he was anyway. So he's just going to get slapped on the wrist, I'm sure. And then his aunt is also I wrote it down because I'm thinking about doing a video for you guys. It is director Barbara Tyson. So really it showed that there was 3 familial relations at the executive level with Tyson, which, hey, that's interesting. All right, I'm going to get to this, John, real quick, and then I'm going to get back with you guys. Or no, you're coming with me. What am I saying? Come with me. Come along and ride on a fantastic voyage. Slide, slippity slide. Dude, Coolio's on a fantastic voyage, huh? All right, let me do this again. I know this gets annoying when people show the streamception. See? Told you I was looking up Tyson Foods. I know a few of you are buying Tyson Foods. So it looks like it is Equitable Holdings, which is unrated. We'll just go through this quick. A large cap company. We're all going to learn really quickly about Equitable Holdings. Looks like they have variable annuity products to affluent and high net worth individuals. So that's interesting that they are dealing with people on that spectrum. They always say recessions affect the high net worth people the least, right? It's the people at the bottom. So that could be an interesting thought process thinking about this company. 6% last full dividend growth, 80 cents a share. Okay. And so you can't look at free cash with companies like this. Earnings payout ratio looks pretty good. 387 shares. They're buying back shares. Sales is mostly up and to the right. I don't know. This looks interesting. Really high return on invested capital, or ROIC, as we say. And let's see, 28% operating margin. So that means they're keeping 28 cents of every dollar coming in the door as profit, which is pretty good. Interesting company. And for our fun and entertainment, we'll just see what boy, this is a nice blank screen we're looking at here, huh? It's something I got to look into, guys. If anyone has any ideas why when I'm live streaming here that some of this stuff takes I don't know, it's the RAM or something. Not the rusty RAM. That's my Twitter handle, by the way. All right. I left John's comment up there. Some of gum. Anyway, EQH in a base case, this just just boilerplate, vanilla intrinsic value shows them at $30.64. So about 6% undervalued. And the worst case is 24.53. So that's EQH. I would have to dig into them more and fully understand the business. Again, when I do these are just really, really quick overviews. And yeah, so let me speed down here. Let me buzz down to you guys. Hey, he likes my singing. No problem, John. If you listen to the podcast, we sing a lot. Why? I don't know. There's no reason why. People have said, why are you singing? I'm like, because I want to sing. You got to let it out, baby. You can't keep it all bottled up inside. When you keep these songs and feelings bottled up inside, you're going to pop your top. That sounds kind of fun. Let's see here. I like Chris. I like you, Chris. You are my friend. He's from not buying, he's building cash. Yeah. Great point, man. I completely agree. Earnings are going to start eroding with the higher interest rates. It's almost math. Everything is going to be more expensive for these businesses to operate in this environment. And I think people just are expecting this quick bounce up. It's not going to happen. I don't think. I should never say never. Rick, what's up, Rick? Let me take a sip from my mug that my daughter made in like 3rd grade. I don't drink coffee. I drink tea. If it's tea, it's for me. What is it? If it's free, it's for me. All right, let's see. Scott's Miracle Grow and Intel. So, Rick, are you looking at Scott's as a turnaround play as well? Because I know there was a lot of issues with good old Scott and Matt. Dude, SPY and Google, the S&P 500. Okay, yeah, dude, you got like a couple hundred shares of Realty Income, right? I think so. Let's see. Also, yeah. Matt's trying to get $1,000 a quarter in. Oh, really, dude? That is awesome. He's been playing this game a long time, right? I should bring you on. You want to jump on? How do I get this link to you? Let's see. Yeah, and Casey, again, thanks for sharing NXST. I did look into them, read the annual report, looked at their numbers, and it's an easy business to understand. They did just roll out the ATSC 3.0, which is, again, like broadband digital for broadband. People that are like the super, super cheapies, cord cutters, they're just using the antenna TV people. So they're going to be getting that they're getting that digital signal, man. That crisp and sweet digital signal, baby. I love it. Anyway, so NXST looks to be really undervalued, and it's a company I'm enjoying buying, and they grow their dividend pretty quick. Oh, yeah, the electric cars are removing AM radios from the cars. I'm not that worried. I know there was some politician here that was making a big dealio about it, but let's see. Diversified dividend portfolio. What is that? Did I say diversified dividend portfolio? I don't even know. Can't remember half the dude. Okay, Antihero. Are you reading my diary? Because Antihero is my favorite IPA from Revolution Brewery or Brewing here in Chicago. Let's see where we're walking the streets, drunk and stupid. Anyway, Coyote Sunglasses. What's up, buddy? Stacking cash in hopes of a February low. Interesting. Yeah. I think we're starting to see a lot more pessimism in the market. And I had somebody telling me about using the VIX when it's around 20, they buy. And when VIX is in the 30s, the low 30s, they buy. And when it drops to the low 20s, they sell. And it's been working out well for them. So the VIX, if you don't know, that's just like, it's kind of a fear gauge. So when the VIX is low, there's not a lot of fear, or not a lot of worry in the market. And when it starts creeping up like toward 40, it means there's a lot of fear in the market. Yeah, Casey, I agree. There's you don't know what the market's going to do. We never know what the market's going to do. We know that there's going to be bad things, and we don't know exactly when. Don't know exactly how deep, but we do want to invest in companies that we think will be able to ride those shock waves and ride the waves of the rising tide of fear and uncertainty and doubt. And hey, FUD can be a fantastic time to buy, unless it's in crypto. That's kind of cool. I was hearing I was listening to old Buffett and Munger, which they're pretty fun. Dude, I've been loving the podcast. I'm listening to every one of the Berkshire shareholder meetings, every minute of it. And it's really been revelation to me to just hear their philosophy. And it's really simple. They're just buying companies they understand. And it's like I said, it's why they won't buy Microsoft or Intel back in the day. Uh, because they didn't understand it. And if they can't fully wrap their heads around and understand a business, then they can't guarantee themselves that it's going to be around in 10 years. And if they don't know if a business is going to be around in 10 years, they can't discount that, because the value of a business in a nutshell, and correct me if I'm wrong, Casey, is pretty much all of that business's future earnings from here until oblivion discounted back to today. And it's getting to that price that today there's a lot of ways to do it. It's more of an art and not a science. And it's why I say that an intrinsic value is pretty much like knowing somebody needs to lose weight without knowing exactly how much they weigh. So that is that's kind of intrinsic value. People put it to the, like when we looked at that number to the penny, dude, it could be give or take $5-6. It could be, it's just somewhere where you're comfortable buying. And it's very, very subjective to each investor. Professor Joe thinks the market's going down. I think so too. I think once people really start digesting and seeing the earnings waterfall that it's dropping, I think people are going to start to just realize that the market is a little, the market's been a little overvalued. So, Aries 169 earnings, forward dividend and yield 192. So you may, if you're just looking at their earnings, you can't look at the earnings. We need to look at the net investable, the NII, the net net investment income. That is the money that they're paying the dividend out of, and they're easily able to pay that. But I think their dividend yield is, I think, 10% right now. But again, with BDCs, it's a whole different ball game. It is a bit riskier with BDCs, and it's kind of like Howard Marks was saying, like, you're getting a higher yield, but you're taking on more risk, which is why I've pretty much always thought, and I think I will be standing by until proven otherwise, that the higher the yield, the higher the risk, and it can be okay, but usually higher yields is higher risk, usually. So yeah, they're up there, but they're able to pay it, man. And I think this environment is really going to benefit lenders when we have these higher rates. And if the rates are sustained and they're a little bit higher sustained, then it's just going to benefit, I think, lenders and bargain hunters is how Howard Marks put it, if I could quote him again. Really, I didn't know Tyson Foods was a big Palantir customer. I'll get to that as I'm reading, hopefully. Let's see what you guys are talking. I'm almost caught up to you guys. I know from when I watch live streams, and I was on Nora's Stock Explorers just as a viewer, and it's funny. Like, I typed something and I'm like, why aren't they talking to me? I just typed it. Then they got to my comment like 4 minutes later, so I feel your guys' pain. Let me get through. Yeah, because I don't like it when I ask a question and then I'm answering, you guys months. I hope not months, minutes later. Jesus, I may be answering you months later. By the way, shout out, got the observed birthday of baby Jesus coming up. So see how many people I can offend with that one. Kevin, what'd you say? How long will it take to recover? Yeah, man, nobody knows. That's why I say this is the beautiful part about life and in the market and your own personal life is nobody knows what's going to happen. Nobody knows. And it would be boring if you knew what was going to happen. I love the movie Dumb and Dumber, but I know how it ends. But I still watch it every now and then. So Professor Joe, are you a Professor Joe? And if you want to say, where are you a professor at? Or is that just your moniker? I don't care. Just make up something if you want. He's a, professor of love. Interest rates are really normalizing based on historical averages. Nice. I think so. It's been crazy that they've stimulated. I don't think the Fed's going to come and save the market anymore. because I think they got their credibility to worry about after the faux pas with inflation being transitory. They're always behind the eight ball, it seems, right? Which makes you wonder, why do we have them? Hey, what's up, Dan? And yeah, definitely check it out because I've always been kind of anti BDC, which is business development company. All that they are is mostly a business that lends money to other smaller businesses, which could be riskier. But what I like about these two is I think they're well run. They have the bulk of their portfolio in first liens, which means if there's a bankruptcy or liquidation, they're first in line to get paid back. So it's not as risky, but it's definitely a risk. And they're making loans to companies that can't get loans from like traditional ways. So, hey, Ultra Runner, there he is, man. I'm glad to see you. Oh, look at this. We got we got Ryan in the house. By the way, Ryan, I just saw the thumbnail pop up for his Jeppy video. So shout out to Jeppy and all those people. Let's see. All right, let's see. Casey, I'll get to your stuff in a minute. I want to get to, is this Carnival? No, what's CC? Is it Carnival Cruise Line? Yeah, let me see. I'll do that real quick. Come along with me, everybody. What was the song? Poor Coolio. I'm singing slide, slippity sliding into him. Yeah, Coolio, no longer with us. Oh, it is not Carnival Cruise. It is, I don't know how to say this name. Chemours. It's Chemours, everybody. That sounds like fancy wine. You want the Pinot Grigio or the Chemours? Chemours. I'll just say it like that, like, knuckle dragon lunatic. It's Chemours stock, everybody. No, I don't mean to put a Southern spin on that. I'm not implying that everybody from the South is a knuckle dragon lunatic, although some people are Atlanta Falcons fans. I don't know. I don't know why I picked the Falcons, just completely at random. I like the Falcons. I liked Matt Ryan when they drafted him. Anyway, back to the business at hand. 53% dividend growth the last 5 years for Chemours. Chemours? We're calling it Chemours. Paying $1 a share, that dividend looks to be pretty frozen. Yeah, since 2019, that dividend is frozen. So they have a frozen dividend, and let me get a little flavor of what they do here, because I don't know. Chemicals, obviously. And this is boring as hell. I'm sure if you're watching on your phone, as I'm trying to read like from this gigantic paragraph, jumbled words. I don't know. They make stuff, architectural, industrial coatings, flexible, rigid plastic packaging, polyvinyl chloride. Dude, I used to be in a band called Polyvinyl Chloride. We were a Breeders cover band. Shout out to the Breeders in the 90s. I really wasn't. That's one of the things you'll find out that I do. I find the fun words like that. And so anyway, their dividend is 1% below the 5-year average. The forward PE is a little bit high, so that's something that turns me off. Low free cash flow payout ratio. I don't know. I probably wouldn't do a deep dive dig into this company. Got to be careful with those words. You might get a strike. Let's see. Yeah, they bought back some shares. ROIC, return on equity 80%, but let's see if that's because they have debt or that's really been rising up high. Well, they've been buying back debt. So I don't know. And since you were so nice to ask, let's check their intrinsic value for you on Chemours, because maybe you want to arbitrage it. Maybe you're looking to just buy it low and sell it high. See, it doesn't always come up. Chemours. There we go. Chemours Company. On a Sunday morning. Look at that. So again, boilerplate, base case scenario. They give it as 36. We can read numbers. Do it. Come on. You can do it. $63.95. Did I say 63? Did I hear a tree in there? $63.95, which is 52% undervalued for the base case. And for their worst case, they give $45.65, so about 33% undervalued. And I just want to see something for my own stuff and grins here. I want to see if the company has been buying. Here, if you want to look at their competitors, you can pause the video later and see if any of their competitors here are undervalued. Was that an Indian company? Yeah. Anyway, shiny object syndrome here. Nobody's really bought or sold anything in the last 6 months, and they did sell a bunch. Edwin Sparks sold $777,000 worth. But anyway, I don't know. This doesn't look for me. I don't think I would invest in Chemours. Would you invest in Chemours? Let me know. Let's see. What's up again, Ryan? I should have brought you guys on. I asked it. I invited Matt on, and I could have sent the link here. I want to get to this because Casey is way more knowledgeable on a Nexstar Media than I am. So Deloitte put out a great white paper on the 3.0 use cases. See, and I didn't read that. So Casey does her deep diving. Really, really awesome. So this is something that's going to hopefully propel Nexstar forward. As I'm reading, minimal cap to get it rolled out. Yeah, so I think so. And technicians have been using the 20 sell 30 buy triggers on VIX all year. Yeah, I'm new to that, man. I honestly hadn't heard that before it was pointed out. 5 round trips and counting. So there you go. You get ideas like that. If you want to do some trading and buying and selling, then you can use the 20 and 30 on the VIX. Yeah, Buffett's the go. Dude, they are great. And both him and Munger, it's just, I would need probably an hour, and I could just probably talk off the top of my head all the things that they've said. And I'm taking notes down. I don't know if I'll ever do a video on it because there's a million videos of Buffett, but it would be easy. It would be easy views, and it would be easy to just cut up, take little segments out of the videos there. Let's see. Oh, let's see. Building any cash position. No, Michael, I have been sitting on too much cash because I had 2 different in the self-directed portfolio and in the bridge portfolio, which is my taxable account. I had 2 different covered calls get assigned, and then the market just kept running up and up. So I've been sitting on cash, waiting, kind of praying for it to start going down, which it finally has. And I'm worried because I don't know how sustained it'll. I think it's going to be down longer, but we just don't know. And I just don't want to get stuck holding too much cash. I'd rather just I'd rather just buy in here and just hope that it keeps going down, and I can even put in new cash and buy cheaper. But yeah, I'm not fully invested, and yeah. There we go. Yeah, everybody, at the conclusion of this video, I would really hope that you would look at my fellow YouTuber, international. Now, that was Ari, International Man of Mystery, but Mr. Ryan Williams, click on his Jeppy video, which I did see the thumbnail, dude. It drew my eye to the crown on top of the P. And yeah, I don't know. Put the link here or anywhere you want. I don't know if you can. Yeah, we were talking about the yeah, one more ultra runner. I'll do it. I'll do a quick one here. Let's see. The Fed's always running behind KC. You're right. KC says, I love my good and plenty. Who was it that said, I love my good and plenty? Charlie. Charlie says, I love my good and plenty. That is the kind of hard-hitting analysis you come here for. People, those 2 people that just came in are like, the hell does good and plenty have to do? Who owns good and plenty, by the way? Is it Mondelez? Is it Mars? Is it Nabisco? I don't know. I don't know who owns good and plenty. Probably Tootsie Roll. Anyway, back on track to what we were talking about is, yeah, she says the Fed's always running behind. So government versus private, but honestly, isn't the Federal Reserve private? They're neither federal nor do they have a reserve, right? Isn't that the running joke with the Fed? And they're not hired. I don't know if that's the right word, but I caught that when Powell said, look, the government or Congress, I think he said, Congress or the government has tasked us with bringing inflation down to about that 2% range, which I don't know if we'll ever see it. I kind of think we might be at 3 or 4% when this is all said and done. But yeah, interesting thought, Casey. Let's see here. I will Yeah, let's do Ultra really quick. I will just do yeah. Let's do really fast. And it was PATK, right? I don't know. Is that Patrick? For Christ's sake. What is if I would put in the right words, huh? Patrick Industries. I was right. Unrated 2.91% dividend yield. Just read it like a car salesman. Unrated 2.91% dividend yield, 14% dividend growth. You can tell I'm having fun, I hope. I enjoy this. I hope it's not too boring for all y'all. Yeah, you know what? I will go through and Pat and Ultra, I guess, if you want, pause the video, go back. I don't want to stay too long on it, but looks like they've been paying a dividend for just a little bit, 15%, 20-year CAGR. So they have been paying that dividend, or did they cut it? It's been low. Interesting. $1.80 a share. I don't even know what do they do. I guess now I want to know because I'm just looking at these companies. They distribute components, building products, and materials for the recreational vehicle, marine, and manufactured housing and industrial. Okay, that might be taking a hit. I see the word subwoofers here. Shout out to all of you speaker heads. Okay, they do a lot of stuff. So that may be affected because it definitely sounds like a discretionary company in that industry. I don't think people need subwoofers to live, although some people may argue with you. 12% free cash flow payout ratio. That's really low. $11 free cash flow per share. What other numbers do I got here? They have increased shares just a little bit, about 1 million in the last year. So yeah, they've increased shares a little bit, 23.1 million in 2020. Sales really big though, but I have a feeling that, their earnings is going to start taking a hit. 43% return on equity, 21% ROIC, return on invested capital, operating margin. Again, free cash flow margin only 3%. So 3 cents of every dollar is making it all the way to the bottom line. 61% net debt. All right. I don't know. Interesting. Not bad. And I'll get you your intrinsic value here because this is the stuff I'm spending the YouTube money on from you guys watching. It was PATK, right? I don't think it was PATK. There we go. Oh, it was just there. I just saw it come back. All right, here we go. Patrick, PATK. I don't know why it didn't pop up the first time. So pretty big undervaluation according to Alpha Spread, $115.12, about 46% undervalued. And worst case, 5 years of negative growth, they're saying 33%. So interesting that they are undervalued. You got to be kidding me. The whole time I haven't been sharing my screen. Well, egg on my face. That's hilarious because, yeah, I just went to click stop sharing screen and it wasn't there. I looked over at my phone and there was no screen being shared. So, woo. I'm so sorry about that. I'm not going to put you all through that again, but interesting. You heard the numbers in my mouth coming out of there to your ears. So anyway, I'm so sorry, man. Maybe next week or email me and I don't know. I'll do something. Maybe I'll figure out something with you, Ultra, but they look really undervalued for their intrinsic value, put it that way. And Professor Joe is a real, hey, that's what you get here, man. Hey, it's hit and miss. You may have this guy on the screen being, hey, look at this, everybody. Look at these numbers. And you're like, what the hell? I don't see anything. So God bless America, land that I love. He is a real professor and new investor. Man, that is so cool. I love it that you're a new investor because I feel like I'm always a new investor too. Kind of like Jeff Bezos at Amazon, where every day is day one. That's what they say around there. And great, man. Love to have you on. And I'm learning too and sharing stuff I'm learning with you, like my development into business development companies. Let's see. John has said the interest rates will go up until unemployment 7, 8, or yeah. Well, that's what they want to do, right? They want to bring inflation down, and then jobs are next. Like, it's a sad fact, but he said it. Like, they need to see unemployment going up, and we're at, what are we at, like 40-year lows or something, 50-year lows for unemployment, which is not what they want. Oh, there we go. I think Steven watched Ryan's video about Jeppy. Let's see. Yeah, I'll check it out, man. Oh, Matt left. I had invited Matt on. You guys remember? I was like, Matt, you should jump on. And I was like, how do I send a link to him? I don't even know. I just assume people will just show up in my green room and I can put them on. Anyway, all right. You guys gonna watch football today? Fantasy football playoffs. What's up? Nice. Too many YouTube dividend people buy way heavy into the tech sector. Dude, I agree, Dan. And the tech sector, although could be a buying opportunity now. And yeah, I do share my portfolio. I still need to update it with all the stocks I bought. I'm going to do that as soon as I get off. And over at degrin.com. So I have a link, I think it's below. At least dapperdividends.com is below. And I have my portfolio up there. You can click on that and it'll whisk you away to the wonderful world of Degrin. Yeah, I'm in, man. This is for tomorrow, 5, 6, 7. Yes, 7 o'clock. Yes, we'll be live. I'll be live here with this wonderful background. By the way, Christmas gift. I'm thinking of buying a new thing because this guy, the Ben guy, there's been so many times I'm recording a video and then I look up at the little thing and I'm out of focus. Why? Because it's focused up on this guy right here. It's picking out his face over mine. I guess it likes his face more than mine. So I'm thinking of getting a new picture, something to complement my, this was my boat. Fun fact, people in the U.S. Navy, at least when I was in the bell-bottom dungaree Navy, called your ship a boat. They don't call it a ship. Yeah, Chemours from Canada. Love to have you, man. Just went to the Hawks game. The Winnipeg Jets beat them. We're going again on Friday night. So thank God we did this thing this Friday, Ryan, because next Friday we'll be in the United Center, taking the family downtown, and we're going to get a hotel room and hang out in the city. It's going to be balls cold, though, but hey. Yeah. You guys are talking. I guess I don't need to put that. I'll get better at screening these. Matt Wen Lambo. How long ago did he put that? Too long ago. Criminy sakes. A few minutes. KC said the Fed is technically not a government entity, but it was created by congressional act and as chair. Yep. Yeah, so they're not, right, not technically, but they're heavily influenced and directed by the government. They're like the dog on the leash, right? The government's pulling the leash, telling them when to go and rubbing their nose in when Lambo. Oop. Oh, so I thought I put him in time. There's a thing on here to put a user in timeout. I don't even know what that means, but all right. Ryan's taking off. He's watching this while he's on the treadmill, or he's going to the treadmill. So yeah, man, well, I'll see you tomorrow. I'm going to watch your Jeppy video after this, and I'll give you some thoughts. Let's see here. No to my channel. Companies in the industrial and manufacturing space. Yeah, you know what, man? I'll tell you what. Let's do this. Dan, come with me, Dan. Oh, let me hide you. Industrial or manufacturing. So watch this, everyone. We'll just go right to Simply Safe. I'm going to share you my screen. Oh, you know what we didn't do? We didn't do the news. We didn't do the latest, which see this white stuff. Why? I think it's my RAM or something like that. I don't know. I think it's the RAM. Stupid computers. Well, I was going to show you my portfolio. The portfolio. Let's see if this will come up a little bit better. Yeah, and before I got on, I checked the speeds. Dude, I'm like 430 down, 11 up. So it's got to be the computer, right? Yeah, I think there was an interesting dividend increase. Hey, Southwest Gas, they're spinning off something. I didn't read that. Oh, it's here. CVS raised their dividend 10%. Still only a 2.5% yield. But yeah, anyway, let me here. So material space. We will show you the portfolio here. Click on diversification. Please, God, baby Jesus, work. And what'd you ask? Industrials, right? So yeah, this is the 3 portfolios that are shared. And industrials, this is what I have. I have a 3M, Lockheed Martin, Eaton, which Eaton has been one of my old companies. Big, nice yield on cost on that. Norfolk Southern, General Dynamics, Honeywell, and Snap-on. And then you said the materials. Material. Yeah, LyondellBasell and Celanese are my 2 materials companies, and I'm up on both of those. And LyondellBasell, let me show you guys this. My portfolio, my biggest yield on cost is right here. This is Simply Safe Dividends, by the way, a very pretty penny. It costs like $400 a year for me. I'm using my YouTube money to pay for it so we can do stuff like this, hang out on the live stream. 17% on Energy Transfer. And here, if you guys want to pause this later, see some of my holdings on Simply Safe here. Where's Lyondell? Here we go. Here's the Lyondell. The LyondellBasell. We have a 6.31% yield on cost, and I am currently up. I'm looking 6.8%, which we just saw. So, yeah, so those are those companies. Hope that helped a little bit there, buddy. And let's see, or CE rather. Yeah, LyondellBasell and CE. Hey, what's up, Jesse? Long time no talk, man. Everyone here as well, as we talked about earlier. Ryan's back. He left and he's back. Let's see. This is the kind of stuff I love, guys. Dude, yeah, working on that summer bot early. Dude, Ryan is, hey, he's a looker, but ladies, he is, and fellas, if you're of that persuasion, he's taken. He is taken. He is out there in Las Vegas. Viva Las Vegas. Treadmill time. All right, I caught up with you guys. So in the last few minutes, hit me with something. What do you want to know? Ask me a question. I think. Oh, by the way, I'm going to do a fun one. The last live stream of the year, I still haven't asked her, but she's going to do it. I'm just going to hop on with my wife. She'll be sitting right next to me, and we'll just do an hour-long Q&A. Anything you want to talk about, within reason, obviously. But yeah, whatever you guys want to ask, we'll just hang out for an hour and ask my wife questions, and we'll have her answer. So we'll share the microphone and blah blah blah. Oh, look at Ryan. He's multi-talented and multifaceted. He's hey, you can call me Dapper, or you can call me Russ too. I love it. Let's see. That goes back to Ryan. You'll remember this. So if you guys remember Rad Dad Investor, I don't think he makes videos anymore, but we would like be texting and he would always call me Dapper. And I was like, this is weird. Like I thought we were on a first name basis. Like, I guess that's I am Dapper, I like to think, but the dividends are Dapper. But I guess if you want to call me that over my name, market leadership in the next cycle. Whew, you know what? I guess I haven't really thought of it. I'm focused on my companies over sectors, Casey. But honestly, I would say probably, yeah. I mean, it's funny. You mentioned industrials. It makes me think of the trains. How cool was it that Congress had to break the potential strike? Like, that's how important and we don't think of it, that the trains are still this important. But my God, they are, because they were worried that we would have a severe issue with the supply chain if the trains stopped running. So, yeah, nice. Jesse thinks healthcare. Call me Double D. Hey, now, I want to get to John's question here. What stocks will contribute towards EV battery, or in general battery storage future in your research? Well, honestly, I wish I hadn't sold it. I sold Albemarle, which is lithium, not dilithium, like dilithium crystals from, was that Star Trek Enterprise? I don't think those exist, or do they? But no, I think that's what powers their ship. Yeah, anyway, Albemarle was really good. I had 10 shares at a stupidly low price. I believe I was buying them at like $80, $90 a share. They ran up with the whole EV craze. They were at like 300 something. I sold them at like I think 180, 190. I got $100 a share and I bought Johnson and Johnson. So not bad, but man, I should have held on to them. But so I think looking at companies that like maybe Freeport McMill, I don't remember it. Freeport, their copper mining, just the materials that go into the batteries, I think, and even risky plays. Like I saw QuantumScape was way down this week. That might be an interesting play if you like to gamble, but you don't go to casinos like I do. QuantumScape, ticker QS, might be a good company to throw a few bucks into. And yeah, my favorite Czech food, Czech goulash. I'm about to make it this week. That's weird that you ask. We were yeah, Czech goulash. I don't know. Also, I just like dumplings, dude. And when I was a kid, I loved kolachki and hoska bread. I don't know if you guys know what that is or you do, but yeah, it's like raisin bread that we used to get. Yeah, my grandfather is 100% Czech, or was, so that's why I got this. This that was my first tattoo, the old the Czech lion. That's off the Czech coat of arms. So let's see. Industrial is his favorite. Yeah, and man, I kind of wish at this point I bought way more Norfolk Southern, and they've really just done nicely. So if they pull back, I might like to add a few more. And I bought them again when I sold 3M. So I'd like to keep. I'd like to average into them more and Snap-on. I'm really hoping Snap-on comes back to the teens. It's getting there. I think we hit like 228, 229. And I think I was buying a few shares at like 208, 207, something like that. Let's see. Oh, energy. Yeah, energy could be. Hey, energy would hit, especially for companies like Exxon and Chevron. And I think, do you guys remember? I think it was like 40 some odd dollars a barrel. That was their break even point for being profitable. So as long as oil is above, we'll say $50 a barrel, they're going to keep making money, man. All right, KC says Mississippi water levels are low. Barges are sail underweight. I didn't read that yet. Where do you get your news from, Casey? I'd love to know that. Like, what keeps you abreast of events that are going on? And, and it's funny, like, I guess I pay attention to macro more than I think I do, but it is important because while, yes, macro can be short term, still, though, there could be a huge difference between buying right now and if you think or you see something coming, but then that's timing the market, right? Like, I guess I kind of did that because a month ago, I just didn't deploy all that cash I was sitting on. I've been sitting, waiting and waiting, pretty damn certain that the market was going to start going down. So yeah, barge rates, interesting. That would be waterways. I don't know. I wonder who runs the Cleveland Cliffs. I know owns ships. I don't know about barges though. Steel Dynamics, crazy undervalued. Steel Dynamics or General Dynamics? I don't know about Steel Dynamics. That's a new one for me. Hey, Cody, we're going to do it, buddy. We're going to make this happen. I at least want to interview you for the podcast, have you on the podcast, which I do. Head to your favorite pod catching device, and I get a little bit more fun on there. So I don't know. It's a different animal than YouTube is. So let's see. Interesting. I love you guys talking about it's so many ideas. Great. Railroads, like a good bet. Yeah. And again, with the railroads, I mean, I really didn't think they were still that relevant and important to the supply chain. But I mean, think of intermodally. Next time you see a train, and I tweeted this out, intermodal, those are the containers that get packed in China, bring the cheap crap here. They get put on a truck goes to the docks, gets put on a ship, container ship, sails across the water, because that's what ships do. If you didn't know, now you know. Figured I'd break that for you. And they pull in another dock, take the container off the barge, put it on a truck brings it to a warehouse, and they unpack it. So yeah, intermodal is a fancy name for those containers you see, and the sea containers, I guess you could call them. And it's a way to packet one time from warehouse to warehouse, and it rides on the truck, ship, even trains. They'll go to trains to trucks. So yeah, you only have to move the container and pack it once and unpack it once. Funny thing, by the way, here in the United States, shout out to all the hardworking Mexicans in the warehouses I see, because they don't put skids on those. So they are packed by hand. And that's what a bunch of these people do. They, on this side, I'm assuming it's probably a bunch of uh, Chinese people over there where it comes from. But yeah, they just pull everything off by hand, put it on skids, wrap it, and then they ship it out to wherever it needs to go. So really cool thing to see. And all right, I'm already an hour here. All right, I'm going to buzz through these really quickly. Google's way too cheap. I don't know. I talked about it with Ari. There's something that I heard about Google being not able to do something in Europe. Like the European, I don't know, the EU, I guess, had some sort of, I don't know what it was. I don't want to speak, but it was something to do with the EU, and I needed to look into it, and I still haven't. I still think Google's going to be the next major company to start paying a dividend. I want to get to a few questions that I asked here, and then, yeah, KC doesn't follow a news service. Nice, just industry reports. So where do you get the industry reports from? I'd be curious to know. And look at this. You guys are still awesome. Just talking. I love it. Let's see. On 3M back in August, turned a corner. No, because they still need to have those. I mean, those lawsuits haven't even fired up. That's what the headwinds are with them. I still think that 3M is going to be profitable, and they're going to be around in 10 years. They're not going anywhere. But if litigation goes even worst case scenario, they're going to spread those payments. In my opinion, I think it'll be structured out over many years. It's not going to be one lump sum due as soon as the court case is over. We saw that with a lot of the healthcare companies like Johnson and Johnson. They all had to do that with the opioid crisis that went out, and some of those payments are out over 20 years. So it's not going to be right away. And all right, I'll do that for you. I'll go extra time here in honor of the World Cup. But with 3M, by the way, I think worst case scenario that they'll cut the dividend in order to pay some of that litigation. If that's worst case, but I don't think they're going to go anywhere. They're too integrated. They have products that are all over the world. Everybody uses them. So that's just my opinion. And it would be a shame to see them go away for a company, Aero Technologies, whatever the ear company was that they bought that was already in this government contract. So they bought this little segment. And, I guess that's the risk you take when you just start buying all these companies up. It might have been a blind spot to them. So let's see. Yeah, Google's price is getting silly for a large cap. Have to agree. I could see them going a lot lower. So we will see. We will see. Hey, Chat GPT is here too, baby. Chat GPT is going to put Google under, right? Let's see. All right. Here, this has been one of Ryan's. He's been talking about Rollins. Let me do this the right way now. I'll go a few extra minutes here for you guys, as long as my voice holds out. You're going to miss football, though. Football starts in 10 minutes. All right. Hold on. We're going to do it right now. We're going to share the screen. I'll just do entire screen. Here we go. Boom. Okay. Let's go back to the top of this guy here. So Rollins, as Ryan has been looking at, 1.41% yield. They do pest and wildlife control services to residential and commercial customers in the U.S. Very easy to understand. Look at how small this is about what they do. Just small. They were incorporated in 1948. They get a safety score of 83. And also, with these safety scores, again, I'll go back to Warren. These are opinions. These are not facts. And Warren always says, we're way more interested in opinions. I completely messed him up. Warren says, Warren says were more interested in facts than opinions. They want to know about facts. And he even says, because people ask him about intrinsically valuing Berkshire, he says, you have the same information that we do. And I don't want to spoil the treasure hunt. So I'm not going to tell you the intrinsic valuation. So anyway, just remember these dividend safety scores are opinions. They're not fact. They're not gospel. And yeah. So they did have a cut there. Looks like before the recession. What's up with that? I don't know. But 20%, 19%, 20-year CAGR, raise that dividend 30%. I'd like to know what that reduction is. Yeah. So they did cut it in, March of 2020. Okay. I guess nobody was worried about pests when you're worried about viruses in your body, huh? Come on, Ram, please cooperate. Let's see. Anyway, 31% dividend yield is 31% above the 5-year ad. Dude, people are like, did he just say 31% dividend yield? Oh my God, that PE is 46. Wow, that seems crazy. But the 5-year average is 49. I'd have to look into that. And if you're chatting back, I'm sorry. Here, free cash flow ratio 47. Free cash flow per share 84 cents. Okay. Sales growth 12%, not bad. Yeah, that's nice. They're pretty flat with their shares. The sales up and to the right, really nice. Return on equity 30%, 29%. ROIC, yeah, they look solid, man. I mean, 17 cents of every dollar coming in the door is they're keeping as profit. That's not bad. 15 cents is making it to the bottom line. I don't know. Not bad. Oh, dude, debt's only 20%. Yeah, you got a good one. The interest coverage ratio, $256.82 of operating income for every $1 of interest expense. And then we will do for you, buddy. Let's, no, not rolled. Roll. Come on. We're going to make me type out Rollins. There you go. That looks like the Orkin logo. Do they own Orkin? I don't even know. So they say they're overvalued about 51% with their fair value being $18 and their worst case being $14. So about 60% overvalued. And for you, my friend, let's look up if people in the company been buying. Here's their competitors. Pause the screen if you want to look through those. And I just want to see their ownership. People have been selling in the last 3 months. Interesting. They got a bunch of sells. Why is everybody selling? I'd like to know. I need to know. Inquiring minds want to know why nobody's been buying and there's been net shares sold on Rollins. So yeah, man. And so as I go through this, what I would want to do is just take a deep dive. I would want, there he is, Matt Money, when Lambo. It's enough there to want me to deep dive into it to get my scuba gear on and fire up the tanks. Oh my God, you guys. I love it. I love it. Let's see. All right. I'm going to get Pee-wee going here in the background in a second. And yeah, so there you go. That was for you, Ryan. When Lambo. Jesse, I appreciate it, man. Thank you. Yeah. Give a like. You missed it earlier, man. I was fumbling my way through this whole thing. Let's see. AMS is weekly, where she goes some insight into shipping logistics. You know, actually, guys, what I've been reading is retail. Total Retail, I think, is the website. I get their weekly newsletter, and they were talking about a trend in retail being escapism retail and escapism experiences, or I think that's what they called it. The idea is that you want to give the customer an experience. So here in Chicago, Vans, where's Harris? I should have told him about this. Vans has a skate park inside one of their stores here in Chicago, like the Nike store. You can just socialize, you can buy product, you can just have an experience. And the whole idea of the escapism is you forget about your daily life for, even if it's 30 minutes, an hour, you're forgetting. And that's why people go into Target, and it's an escapism thing. Like you can just, churches, when people go to church, it's escapism. So you're forgetting about your day-to-day life for a little bit. So anyway, yeah, So appreciate it, guys. They do own Orkin, and we'll end it here with Argentina winning. Very, very cool. So we went a little bit long on this one. I do appreciate it. My voice is, whatever. It's doing what it's doing. And oh, where's my, here we go. I'm like, I lost him. Well, the Starbucks cup I got here from my house. I need to hide your comments, Steve. But I do thank you guys for stopping by. I truly do. I apologize. I don't know what was going on in the beginning. I like I said, my mind's in a million different places right now. So yeah, shout out, cheers, subscribe. If you want the newsletter I'm going to push out tonight, you can get my little ebook here, Brief Thoughts on Life, Love, and Investing. It's really super quick. It's free. Just really quick. I don't even know why I'm bothering. Really 1-2 sentence lines. I wrote it for people that don't want to sit and read paragraphs pretty much. But yeah, in the link below, you can sign up for that. You'll get the PDF file. You'll get my my book and all that stuff. So I appreciate it, guys. Thank you. I'll be on Ryan's channel tomorrow night, unless I get stuck at a job late. And I do appreciate all you guys. I really do. I look forward to seeing you next week. Thank you so very, very much. And yeah, man, I will see you guys in the next video.